So when you go into dinner with your friends who think crypto is bullshit, there's actually like a lot of people who are using crypto. It's not marketed as being a crypto product.
Do you think those guys will ultimately be the winners?
The number of stablecoins we'll see over the next couple of years is just going to be astronomical.
What do you think about memes?
For some companies and some projects, people just want to extract value and make as much money as they can as quickly as possible.
Do you think that these fair launch platforms are disrupting the VC space at all?
This episode of the Decypher Podcast is brought to you by a meme coin that truly goes hard, Cock Inu. With its iconic name, Cock Inu is the perfect mix of fun and cheeky humor. In 2024, Cock saw over $1 billion in DEX volume, making it the #1 meme coin on Avalanche. Join the Cock Book, a community-owned sports book with a portion of profits going straight back to buy and burn Cock. Plus, stake Cock on Benchi Finance and earn rewards with Cock Lateral. The future is bright for this hilarious token. Ready to join the fun? It's all about Cock.
So I like to open up the podcast typically with who are you and what do you do?
Yeah, so Jeff Morris, now the managing partner at Chapter One, but had a long career in product before that.
Mm-hmm.
Down the street, was the Tinder office.
Oh, wow.
And so I led product and revenue over there for many years. But grew up in the Bay Area, was always around tech growing up, really just loved building things, and found tech to be the best place to kind of make your ideas come to life.
Mm-hmm.
Started a career, I went to film school.
No way.
A lot of people don't know this. And
that's crazy.
And I got my butt handed to me just trying to like make movies for a couple of years and realized this is 2008.
Mm-hmm.
Twitter was coming up, like all these like great companies were being built, and so I moved back to San Francisco and began my career in tech.
Interesting. That's wild. I think that you are super uniquely positioned as a VC because of product, because like in crypto, I feel like there's often so little emphasis placed on product, right? That people who think about and focus on product, and we're seeing this more and more, are really have a unique advantage. So,
yeah, in like 2018, I was still at Tinder, and I launched. We call it Page Zero because it's Chapter One. All of our funds are page numbers, but it was built as a crypto fund to help people build better products.
Mm-hmm.
And there was a big CoinDesk article, it was like the Tinder, VP of product is launching a crypto fund. And it's funny because I read that headline and like the same kind of ideas we were trying to solve for then, making crypto more usable, making products better. Like we're still trying to solve that today, right?
Mm-hmm.
Six plus years later.
That's crazy.
Although I would argue the products are getting much better. They're still not quite on parity with kind of like Web 2 or whatever else you might think of. We can go into that, but I think a lot of it's driven by infrastructure and also mobile not being fully developed yet.
Oh, interesting. I think like specifically in the last 6 months, I've really started to see some products that feel like compelling products by themselves. And I think a lot of the crypto space, people will like check out your product, check out your project, look into you, know about you because it's under like the crypto banner, right?
Yeah.
So anything that has like, is on ETH, like you'll have this certain audience kind of built in, which normal companies don't have that. Like traditional Web 2 companies don't have that. And if crypto companies didn't have this kind of built-in audience of people who follow crypto, then they'd be like a lot worse off.
Yeah. Yeah, I think if you are launching a crypto product, you have so many advantages, right? Just saying we're a crypto product, that's like, you can look at how many addresses are on chain, and the addressable audience is pretty massive just with that. Maybe it's 150 million users or whatever it might be.
Mm-hmm.
I think what we thought was going to happen in 2021 was that there'd be more kind of like Web 2 brands building crypto products, and that would kind of bring those worlds together.
Right.
I think today there's still like very different audiences. We're seeing some overlap, and people kind of dip their toes into crypto from call it like mainstream normies come into crypto every once in a while. But if you look at like Farcaster as an example, I was listening to Dan speak last week, and he's like, hey, we've really figured out like we're not competing with Twitter, we're building a social network for people in crypto, right?
Interesting.
Whereas I think maybe like 3 years ago, the goal was just to build like a decentralized Twitter, right? But there's so many advantages when you say, hey, we're going to build a product for crypto people, because you lean into a lot of the fun things that make crypto special, right?
Right. That's interesting. The other thing, like, I think one of the biggest Web 2 to Web 3 transitions was actually Web 2 entrepreneurs that became Web 3 entrepreneurs.
Yeah.
And Mike from EtherFi is like this as well as Dan. I'm sure you have some other portcos that are kind of like this Web 2 to Web 3 founders. And typically, like, are often very successful Web 2 founders that come into Web 3. And I feel like those people have produced some of the biggest companies in crypto.
Yeah, this has been like one of our secrets, which I think, like probably was a bit contrarian maybe in 2021, was like we really wanted to be the place that Web 2 founders would think of, or we weren't afraid to back Web 2 founders who had like some, we call it like being crypto native enough, like because we as a fund think that we're the same in terms of like starting our careers in Web 2.
Yeah.
We don't call ourselves a crypto native fund, because the truth is, if you want like that absolutely most degenerate crypto investor, like that's just not us.
Right.
We're very much a balanced perspective, as coming from building products at large, public companies. Our goal is to like, come to a founder and say, hey, we've seen this in Web 2, and it kind of went this direction. Probably a good example is like Dynamic, which maybe they built kind of like the Web 3 auth solution that most wallets use. We'd invested in a company called Stitch in our first fund, which is doing that for Web 2. And so there's all these parallels. Or investing in Farcaster, like we kind of seen the social playbook play out because we had built a lot of those companies, and it was obvious to us that there was opportunity there where, I think Dan's pretty, Dan worked at Coinbase, so I would consider him to be a crypto native founder, but a lot of their philosophy wasn't, what you consider to be like what a crypto native person might do.
Right.
How many social products have crashed and burned launching tokens over the past 3 years and before they have product market fit, right? And so, but yeah, we think Web 2 founders are very underrated, and a lot of them, I think, if you're leaving Web 2 we're in a bull market now, but if you were leaving Web 2 in like 2022 or 2023, which is when Mike from EtherFi pitched us, we're like, you must really have conviction, because this is like the exact opposite thing. Like crypto native people are trying to leave crypto right now, right? And you're leaving a really stable job in, whatever, education or SaaS or whatever it might be, to come to crypto. Like, I want to meet you, because that's like a bull signal to me.
Right. Well, the other thing there, especially with Mike, is like he is both Web 2 and crypto native. And I think sometimes people think those are kind of mutually exclusive, but they're not, right? You can come from a Web 2 background, but still be, completely crypto native and really understand the crypto native space. And I guess that would be like the double threat, like the superpower, right?
Yeah. He had launched a crypto hedge fund previously. And so there's another part of crypto, which is like being crypto native. Mike's very DeFi native, right? And that's very different than being, like the skills of a DeFi founder are very, very different from what you see from a Web3 social founder.
Right.
And so he discovered liquid staking and staking as a whole while he was running the hedge fund, because they were trying to figure out how to generate yield for their hedge fund, and they were looking at Lido and other things. But they're these founders, right, who know how to build. His company before EtherFi was a 300-person company. I think they had raised $200 million. Like he knows how to build a team and an organization. And so as a seed investor, you're kind of thinking, for all the turbulence in crypto, leaning into people who have built companies before is a pretty good strategy, because you at least know like the company's not going to fall off the rails for unforced errors that maybe you'd see from a first-time founder.
Right. Interesting. Yeah. I talked to Mike super early on too, before they had even raised, and it was like a really interesting conversation. I remember talking to him. I was like wait, I feel like valuation is kind of low here. And he was like, no, we're trying to do that, you know? It was like a total shift. And yeah, it's obviously they've had incredible success. So when is the first, to go way back, when is the first time you bought crypto?
I bought Bitcoin in 2013, and I was at a marketplace, Web2 marketplace, and kind of all my coworkers were, I think it was at like 180 or something at the time. Thought it was a really dumb idea, and so I wish I'd leaned in more. Obviously, like you always say that. I'd seen the Filecoin white paper in 2014, and had a chance to invest in, pull the trigger. Was just kind of fascinated by, I was always really interested in open source, I think.
Right.
And if you look at the parallels between open source and crypto, like there's often a lot more overlap than you think. And so being developers, distributed developers building software together, the only difference is crypto has a better business model for developers, being they can actually make money.
Right.
But so I looked at Filecoin. I really started getting into crypto in 2016, 2017, mostly because I was running revenue at Tinder at the time. And I became really fascinated by just new business models. And then also I was pretty early to kind of the NFTs that we think of today being, I'd seen CryptoKitties pretty early on, and we were seed investors in Dapper Labs. But it was, to me, like a very logical thing that you'd have digital goods that people would pay for.
Right.
Like that wasn't it wasn't a leap of faith for me. It's like, because I was selling digital goods at Tinder, and it was just like, okay, this is a different audience and different use case.
Right.
I also grew up collecting all sorts of things, but was a big sports card collector growing up. And so this idea of kind of collecting things online was really natural to me. And then the last thing I'll add is I always was really fascinated by this intersection between social networks and money. And so if I was actually interviewing at Robinhood in 2018 or so to join their team,
right,
to figure out how to make Robinhood more social, because there weren't any great examples of financial apps that had built social networks. And then I kind of thought about crypto, and that's really what crypto is, right? You have money and you have communities, and that overlap of the social behaviors that drive the development of the projects and also the belief in their long-term value is, to me, what makes crypto really interesting.
So tell me about the fund. Like, when did you decide, to raise a fund, and why was that interesting to you, and why did you explore that versus kind of, founding your own company or working for another tech company?
Yeah, it was kind of a happy accident where I was a scout for Index Ventures in 2017, and I dedicated a good percentage of that fund to crypto, as I mentioned, and it just became a passion of mine. Like that paired with I picked a few pretty good projects. So we were seed investors in the Graph at the time, and a few other projects that did Dharma, a few other projects that did well, and so that fund ended up just like really, really performing well. I think it's gonna be like a 10x fund. It's already close to a 5x in terms of DPI, but I was like, wow. One, crypto as a asset class is really misunderstood by everybody in traditional venture. And so I went and interviewed at a bunch of Sand Hill Road venture funds, all great funds, but none of them really had any interest in crypto. I wasn't only interested in crypto, to be clear.
Right.
But it was pretty clear that they were not spending enough time there. And then the other part of it was, I think, related to, again, our value proposition as a fund being, we say we're a fund for product people, but there wasn't really a fund that I felt like spoke that language at the time to trying to track the best developers and product people and designers who were just really interested in like the craft of building great software, which to this day in crypto, like that's a very small percentage. I see that more outside of crypto, but we really kind of tried to build a fund that would speak to those founders, and I think to some degrees we've done a good job there.
Yeah, very interesting. What you talk about like product a lot in crypto. What did you see as kind of issues with product at the time, and how did you think about addressing some of them?
Yeah, I think the basic issues which we still see today. I mean, the number one issue at the time was just throughput, so speed and cost.
Mm-hmm.
We saw so much network congestion within the Ethereum network in 2018 or so. It was kind of a showstopper for anything that was going to become mainstream. Like we as crypto users put up with it because we just do. But the bulk of people didn't want to pay, $5 to confirm a transaction or wait however many minutes for that to be confirmed.
Mm-hmm.
So there was just a performance issue to solve. There were also like this on-ramp issue, I think, has always been a challenge. Like how do you get...
Still is too.
Still is. We invested in MoonPay, which I think has tried to solve a lot of that, but it's still a problem. Like today we're seeing a lot of really cool products trying to onboard people to mobile using stable coins and being able to trade in and out of your native currency. I think that's being solved today, but it's still pretty hard. Like I saw a demo where you can now use Apple Pay to purchase stable coins, which is pretty cool.
Yeah.
But if you think about even connecting a mobile wallet to where your assets are being stored, if they're self-custodied, like that's a pretty hard action.
Mm-hmm.
And even today, like a lot of the wallet connect features are pretty unstable if you just use them. And so there were like basic blocking technical issues. The other issue, which you probably saw as well, was just regulation on the SEC side, but also on the Apple side, Apple and Google.
Mm-hmm.
Apple particularly being really strict on crypto, unfairly strict, I think has held back the space quite a bit. And so you saw people doing like progressive web apps and trying to get around, like Friendtech did this, or even Farcaster, their first Warpcast client was not a native iOS app. If you've ever built to mobile, you know the power of just living on someone's phone, whether it be push notifications or any engagement loops. Like that's really powerful, and unfortunately, crypto hasn't gotten a fair shot. We were investors in Family, which got acquired last year, and they never even went live on the App Store, right? Mm-hmm. They built probably the best crypto wallet because they just couldn't get approved, and so there are all these issues. I think looking forward, because it's easy to look back and like think about how much we've overcome, or how many disadvantages the space has had. I think we're going to see those start to become. Crypto will get to the point where it has a fair shot, is what I'm saying.
Right.
Where we'll have better regulations, hopefully better treatment from the platforms like Apple and Google, and then it just becomes like are we creative enough to build new use cases and new utility that people want to use? And I think the answer will be yes, but we're just starting to get to that point where we have that opportunity.
Yeah, to pick up on a couple of threads there, like the onboarding problem, I've gone through several on-ramps that have like all ended up at some point like restricting me on the bank end, and I think that's probably the biggest component, where like the way that those companies are interfacing with traditional bank rails, that's kind of the obstacle. And then like you're talking about app stores, and app stores kind of providing another obstacle. Why do you think these kind of like incumbents are so unfriendly to crypto?
I think a lot of it comes to like how they monetize their app stores. And so if you look at Apple, they want to own the in-app currencies and that in-app purchase flow.
Mm-hmm.
And crypto doesn't play very well with some of that, because if you're creating some like in-game economy and the ask is to use whatever native crypto asset, it's very hard to design a product that complies with Apple regulations to use their in-app payment system. Like it's like the most boring answer ever, but it's just Apple loses control when they let a crypto app on their app store. And so there's that component. I think, if you were to like really like get under kind of like behind the scenes with what Apple thinks, I also think they don't have a real crypto strategy. And so internally they don't have like a voice encouraging them to be more crypto friendly from what I've seen. And so, but it's been years and years of this. So it's, unfortunately when you're dealing with Apple, they don't have, there's not a lot of transparency with why they make decisions. It's just, we dealt with this at Tinder all the time. Like you'd release some new build and it would get rejected. We were the top grossing app in the App Store, and we would barely get a email response, right? And so you can imagine if you're a startup and you're building a crypto app, how hard that process might be.
That's interesting. It also speaks to some extent about how crypto is kind of a disruptive technology. Yeah. Like if an organization like Apple is a bit hesitant to kind of give up those flows, it means that crypto is kind of doing something to disrupt those flows. So very cool. Where do you think mobile is going? Do you think it's something like the Solana phone where crypto is going to have to create native products to kind of bypass these flows? Or do you think, tech is going to become gradually more friendly?
Yeah, I think the Solana phone was a great one. It was great marketing, like saying, hey, we need crypto on our phones, and the App Store and Google are making our lives harder. So let's just build the whole operating system and a new mobile phone for probably like the 100,000 people who would be interested in buying that. It is pretty interesting because you probably saw the Pudgy Penguins airdrop this week, and all the people who owned a Solana phone, I think they got like $836 in airdrops, so like almost covers the cost of the phone.
Well,
right?
I know like last year at this time, the Bonk airdrop was covering the Solana phone, so people were buying it, and it sold out just because it was free at that point.
Yeah, so that's like a pretty interesting part of just owning crypto hardware, and I think you'll start to see more people kind of push that. It's funny because you see all these AI native hardware products, and you kind of wonder if they were more crypto friendly, or if they would people be willing to use those. I think the answer is probably yes, but I think on the mobile side, we'll start to see Apple and Google, at least on like the basic kind of payments use cases, start to be more flexible. And we're seeing that, we've seen a lot of new Venmo type of pitches using stablecoins lately, which is pretty interesting. And then you have things like the Ton ecosystem and Telegram, where you have many apps being built within big kind of big platforms. And again, that's like its own mobile use case, and it's on your phone, but it's not an app you download in the App Store necessarily.
Interesting you touch on kind of like Venmo-like apps. I know Venmo, you can buy crypto. PayPal, the parent company, obviously has just launched recently launched PYUSD, a stablecoin. Do you think those guys will ultimately be the winners in the crypto payment space, or is there space for startups?
I think it'll be both. Like the number of stablecoins we'll see over the next couple of years is just going to be astronomical. Like you will see most. I could probably count on like multiple hands the number of stablecoin projects that are going to be released in the next couple of years, and I don't think PayPal specifically is well positioned to win the crypto market. And I think the overlap between their user base and crypto users is probably pretty small. I'm happy they're experimenting. Like the more folks who are building stablecoins, I think the better. But I would think startups will be at an advantage if they focus on very specific geographies. So probably the most compelling versions we're seeing are non-US, like very country specific in LATAM or Asia. Mostly because I think those are the audiences still today who see the most value in using stablecoins and having a crypto native bank account, right? But yeah, it'll be interesting to see. I feel like everybody wants to launch a stablecoin today, and the Bridge acquisition I think is making stablecoins more topical, especially within the venture community. The number of stablecoin pitches we're seeing now is higher than I can remember, and
interesting.
I think it's the kind of mimetic nature of venture. When there's a Stripe acquisition, like everyone, it kind of like blesses the category, right?
Mm-hmm.
And so we're seeing that today quite a bit.
Wow. So you touch on memetics a little bit here. The last, I guess, starting in kind of late 2023 and really kind of reaching a frenzy in the first half of 2024, we saw this like massive movement to memes. And then again, it picked up in the early fall. And now we're just kind of seeing a bit of a transition into AI stuff, a little bit of DeFi stuff. What do you think about memes in general?
Yeah, I think so. This is like one of the hottest tribal wars you can. If you bring up meme coins at a crypto conference, you'll see people like passionately taking both sides, right? Right. I've always taken the approach, and this has just been my approach to building things and investing, is that you shouldn't ever like prescribe how people should act or behave. Being like taking it back to Tinder, right? Mm-hmm. People like want to date in an easier way on their phones. People wanted to use Tinder for hooking up. People wanted to use Tinder for getting married. And you kind of give people the software and the tools, and they tend to do what they tend to behave in the ways that they want to behave. Right. And so I think in the case of things like Pump.Fun, like they had a really interesting idea around fair launches and making it easier, like, you know, 1 or 2 clicks to launch a new digital asset that really kind of caught on. I think they understood how to market to that kind of like degen crypto community. And the team, I think, had some really good insights around how to make it very social. Some of it's backfired, obviously, with like the video component, but they're experimenting with new ways to extend those behaviors. I don't personally have like religion around whether meme coins are good or bad. I just know people seem to really love them. You know, millions of, I think there's 15,000 new assets being launched every day and millions. I do think where things get tricky is you hear these stats like 96% of users who purchase a meme coin end up losing money. And so from a retention perspective and like crypto market size perspective, normally when people churn out of an application, like they don't tend to come back. In some ways you can bring them back when, you know, maybe you have like another like speculative moment where people just like are like, screw it, I'm going to jump back into crypto. But I worry about burning goodwill with new users. And I think the NFT stuff, like I think a lot of my friends who were new to crypto bought like at the top of the 2021 NFT cycle and haven't come back to crypto.
Right.
And so I do question some of that. It's, you know, I think crypto is just going to have like a wide range of use cases and behaviors, and some people will want it for stablecoins because they live in a inflationary country and it's like actually like core to their financial health. And then there'll be some people who live in Williamsburg who just want to trade meme coins, and that's what they want to do, right? And so it's like you can't really dictate that behavior.
Yeah, I guess too. There's some relevancy to like this conversation of like VCs. Are VCs extractive? Have VCs created incentives where projects now want to launch at very high valuations, and some of the gains are now taken, are privatized and no longer available to kind of like public retail markets.
Yeah.
And recently, in the last maybe a couple of months, we've seen like legitimate projects launching on like fair launch platforms. Yeah. I think Arc on Solana launched on Pump.Fun. It's like a really legitimate project with a real team, a large team. So, and there are a couple other projects that are kind of similar in form factor there. Do you think that like these fair launch platforms are disrupting the VC space at all?
I think they could potentially like eat away at the opportunity set for VCs. I still think there'll be some founders will want to go fair launch and won't need VCs for whatever they're doing, and some founders will say, hey, like we need to build a real company before we launch a token, and that will require capital. And so the way to make that happen would be to go with some reputable venture firm. And so I think you'll see both. I think probably what people, if you just dig into like the actual emotional aspect to this, is like people are pretty frustrated with the idea that VCs have had some advantage, right? And so you see, I think in many ways, like meme coin culture and things like Echo, which Kobe's building, are a response to that and saying, hey, we want to be on like have the same opportunity set as you do, and don't want to feel like you're just gonna shit on retail. And so that's been, I think it's healthy to have both, right? And to give founders both options, and they can do what's best for their company and project.
Well, notably, EtherFi had an airdrop that rewarded millions, maybe billions of dollars of value to the community. One of your portfolio companies. Do you, as a VC, when founders come to you about like token launching, do you say launch at a low valuation? Do you say airdrop? Like, how do you think about this as an investor?
Yeah, I think the space changes so quickly, and so like the low float, high FTV narrative really became a conversation like probably last June or so is when I remember it. June 2023. I think that became more of a conversation as you saw. I don't know, like the Eigenlayer launch was a big. There have been these projects that have launched where like that conversation comes back. The idea of points weren't like a narrative a year ago, right? And then points became a big discussion. So all these things are kind of like fast moving narratives. I think the goal though is to make sure that the community, like the real community members, not the airdrop farmers, are aligned with the team and the investors. So we're all, if you think about like the three constituents, there would be the founding team, investors, and the community, making sure that we're all aligned on the long-term health of a project. For some companies and some projects, like people just want to extract value and make as much money as they can as quickly as possible. And then for other projects like EtherFi, like Mike truly wants to build a 20-year, 30-year company. Like this is what he wants.
It's crazy to hear Mike's vision. Yeah.
So he actually cares less about like the day-to-day market swings of the token, or he definitely cares about how the company will sustain itself over the long, kind of like next 10, 20 years. But it's very long-term thinking, where I think some founders get like really caught up in, hey, like what should our FDV be at launch or what should our airdrop strategy be, which are all like components of building a great company, but they're shorter term things to solve.
Interesting. Very cool. I'd like to touch on some of your portfolio companies. We talked about EtherFi, and kind of why you are interested in them, why you've invested in them, and kind of like what your hopes are for them. The first one is Farcaster. So tell us about Farcaster. What is it, and why is it something that you think can change the world?
Yeah, Farcaster is building it starts a decentralized social network. They've now built their own protocol, which like the basic idea is you have Farcaster, which anyone can download. The client's called a Warpcast. You can download it on your phone, use it. If you download it, you'll probably say, hey, this looks a lot like Twitter, but what you see happening there is actually a lot of the crypto native use cases around claiming airdrops. More financial use cases are being built, and it's becoming, I think, a really great way to find alpha within the crypto community.
Right.
There's also the protocol which you can build on, and that allows you to access the graph that Farcaster's built. Idea being you won't have to kind of build your own day one community. You'll have that. You'll be able to access that when you build your application, which is pretty powerful. But I think the core idea that is exciting today is people want want other options than Twitter. Like that's pretty obvious. And then specifically to crypto, like it's really hard to. Crypto Twitter is very noisy, as we all know. It's hard to find really high quality discussions and dialogue, and that's kind of moved towards Warpcast, which I think is becoming clear right now.
Yeah, that's kind of interesting too. This idea of like a social graph as distribution or like a built-in audience, right? And I've seen a lot of, in the last couple of months, I've seen a lot of kind of Farcaster aligned protocols or projects launch, and they've generally been quite well received.
Yeah. It's still, I mean, these user numbers are still small relative to Facebook and Twitter, but you see, 100,000 people who are using the app and really passionate about it. And I also like to say, like, crypto users, to our discussion earlier, I ran revenue at Tinder, so I think a lot about things like ARPU, average revenue per user, ability to monetize. Like the revenue per user and the value per user is much higher than Web 2.
Right.
And so it's like I try and explain the metrics of Web 3. Like I wrote an article called Crypto Market Fit, which was just like throw away all the metrics that we kind of held companies to in Web 2 and think about what what a Web 3 network, a healthy Web 3 network might look like. And it probably looks more similar to, obviously pumped up funds like the furthest end of the spectrum, but with a relatively small user base, they're doing, hundreds of millions of dollars in fees to the protocol, to the team. And so you can monetize user bases really well. We saw that briefly with FriendTech. I think they were on track to do like north of $100 million in revenue with a small user base. Now today we'd say like, hey, that didn't work. But it was, I think it was an exciting example when it was first built.
Absolutely. I think to a large extent too, that's like the financialization of crypto, and when you're to some extent selling the prospect of making money to people are willing to pay a lot of money to access those possibilities.
Yeah.
So like Pump Fund, FriendTech being an example of that. Why do you think FriendTech failed so spectacularly?
I haven't thought about it too much lately, but I think again, going back to like the economy they built, the majority of the I had my own community on FriendTech, and people invested in my token. The vast majority of tokens did not make money, and when people start to lose money quickly, they exit a community. So we saw creators selling their own tokens. The core premise of having like these, like they market it more as being like private chat groups. As a creator, the requirements to keep your community engaged and active were pretty high. Like you basically, it was weird because I didn't like sign up to have my own FriendTech community. The token launched and people bought it, and so I felt like I needed to like be a community manager of my own token, and eventually it just became something I stopped paying attention to.
Right. Yeah, it's like you kind of have to launch your own product, your own project in some way.
Yeah.
The social media has kind of been often like it has been touted for a long time in the crypto space. Like we need a crypto native social media platform. It'll eat the world. I think one thing I haven't heard a lot of people talk about is crypto media. One is crypto media exists on conventional or at least like tech rails, like YouTube, right? Twitter, obviously. So crypto creators like me as well are focusing on not crypto native platforms, and they're also typically using non-crypto native business models, right? Like sponsorship. Like we haven't seen a podcast launch a token or anything. Do you think, with your experience with Farcaster, do you think this will change? Do you think people will embrace more kind of crypto native platforms and revenue streams?
I would hope so. I think we've seen things with streaming payments and
or like NFT podcasts and stuff, but they haven't been really adopted.
Yeah. I think like the last cycle hinted that some of these things would be possible if you saw things like music NFTs or but I think the to be a content creator and also like think about how to build a kind of like crypto monetization those are two very different things and very hard to do.
Right.
I do think it'll be possible. I think the meme coins kind of hint at what like the number of assets you'll have available to a given audience. I just don't think that most creators, this isn't like what they think about when they wake up in the morning, how to manage like a currency and keep a community active. And so it's hard for them to do, but I do think some social platforms can potentially disrupt Web2 incumbents by adding, in-game, mostly other in-game currencies for gaming. But we've seen experiments like this, like Dracula, which is trying to build a crypto native TikTok that I think like hint at things that could work eventually, but still pretty early.
Right. Thematically, you invest in crypto, but you also invest in other kind of frontier tech. Do those projects fit into your vision for crypto in some way, or do you kind of like put them into separate buckets?
Yeah, I think like the way I think of technology evolving is that we won't have these like separate ecosystems. You won't have like AI companies and crypto companies. They'll all eventually start to merge and use each other's technologies in new and exciting ways. So we've been through like a few iterations of what, like how we describe our fun, but I think what we've seen is like we do our best work when we have a good view of what's going on outside of crypto, but also are deeply embedded within the crypto community. And the overlap, I think, is starting to become more clear, especially the overlap between AI and crypto, I think, hints at something that might happen, which is you're seeing a lot of, well, we've seen both. We've seen projects like Together, which started as a crypto company, go further in the AI direction. We've also seen a lot of crypto native companies now trying to serve an AI developer market. I think these worlds will just converge, and I still think you'll have specialist funds, so you'll have like truly like crypto native venture funds, but we won't have to go on a podcast and talk about why crypto is different from the rest of tech.
Yeah, interesting.
I don't know when that's going to happen. I was hoping it was going to happen sooner, but it feels like we're starting to get there. And I think with I mentioned stable coins, but also just with better regulation, I think you'll see more developers in Web2 feel comfortable with experimenting with crypto.
Yeah, that's very interesting. I sometimes think about crypto products as needing to stand up by themselves and be like compelling products on their own. And I mentioned that a little bit earlier, but I've never thought about like crypto companies needing to like, have their own investable thesis to, investors outside of crypto, and that they're compelling to investors outside of crypto, not because of their crypto narrative, but because of their kind of fundamental value proposition to those investors.
Yeah. I think I love to use the example of Polymarket because I think it was a breakthrough product of 2024. Forget crypto, like across technology, and zero headlines referred to Polymarket as being a crypto product, right?
Right.
But you have the ability to connect your wallet. Obviously, you have crypto payments but it wasn't a crypto product. And so I found that to be really interesting because to me, that's been the goal, is to have crypto serve as a way to, bootstrap a product or because crypto provides some utility to a specific use case. But, we'll see more products like that, I would think. So that's kind of what I was looking forward to. And it's really, I think the crypto community's it's a missed opportunity. I don't think we've like planted a flag and said, hey, like Polymarket was and is a crypto product. So when you go into a dinner with your friends who think crypto is bullshit, it's like, hey, there's actually like a lot of people who are using crypto. You just, it just doesn't, it's not marketed as being a crypto product.
Very interesting. What's your, in 10, 15, 20 years, what would be your grandest vision for chapter 1 and what you've achieved there?
Yeah, I think if we continue to be the product fund and to bring really interesting new software and digital products into the world and continue to find really interesting categories before everybody else, will be a success. I also love when we bet on founders that would not otherwise be fundable or be in business, and having them build companies that are really special, I think is critical to your job as an early stage investor.
Right.
But I think taking risk on things that other people aren't willing to take risk on, and having those companies be like net good for the world is always a goal of ours. But we kind of live, we have a vision for what we want to become long term, but especially on the crypto side, like a lot of it's just being really in tune with what's going on day to day and being curious and always trying to learn. Because I think, especially in crypto, the learning curve is so day to day that you can have a 15 or 20 year vision, but the kind of like the daily work is making sure that you are up to date on what's going on. And it is just so, like, I was in a Helius board meeting this morning, and we were just talking about how much has changed in the Solana ecosystem in the past year, right?
It's crazy.
And so I have like big dreams and think about 20 years, but I'm also like more paranoid about today and trying to make sure that we're continuing to get better as a team.
Phenomenal. Well, we'll wrap it up there. Jeff, thanks so much for coming on.
Thank you. Appreciate it.